While I bought my first mutual fund units way back in 2006, it wasn't until 2015 that I got serious about investing and began this process of creating a well structured portfolio. Over the next 4 to 5 years, I invested in more than 35 different equity schemes, large caps, mid caps, ELSS, contra funds, even thematic funds like healthcare and transportation. And while I know 35 is a lot, my alibi here is that I was trying to find the right combination of funds, and one category that has been an all-time favorite of mine are the multi-cap funds. So multi-cap is a big category. Okay, maybe not as big as Flexicaps, but still a prominent category with over 1,30,000 crores of AUM. And in this video, I'd like to discuss why multi-caps deserve more of your attention, how it differs from Flexicaps, the category's performance, some important variables you need to be mindful of, and much more. I might be a little biased. After all, multi-caps have done spectacularly well for me over the years. So while you all call it as multi-cap, for me, it's my ultimate cap. Let's begin. Now, the use of the term multi-cap is nothing new. And way back in 2015, one could have invested in the Motilal Oswal Most Focused Multi-Cap 35 Fund or in the SBI Magnum Multi-Cap Fund, all of which at that time were referred to as diversified funds. But then in 2018, the Securities and Exchange Board of India, the SEBI, performed a magic trick. And in an instant, most of the multi-cap funds simply disappeared. Something like this. You see, the SEBI had then come out with some guidelines requiring every mutual fund scheme to be bucketed under clearly defined categories. And in that context, the so called diversified equity funds were assigned the phrase Flexicap, prompting many schemes to change their names accordingly. Now, since a Flexicap fund could allocate any percentage of its assets to either of the three buckets, this effectively meant there was not a single mutual fund category an investor could access to build a truly diversified portfolio. Realizing this problem and wanting to have something that is truly a combination of multiple caps, in September of 2020, SEBI mandated the creation of a separate multi-cap funds category wherein every scheme must have at least 25% of its assets invested in all three market cap categories, that is 25% or more in large caps, mid caps, and small caps. Now, on the face of it, this might seem a bit restrictive, but the way I look at it, and from a fund manager's perspective, he or she continues to have flexibility in deciding the overall allocation, such as a 50-25-25 or a 40-30-30, etc. And secondly, the fund manager, anyways, has the freedom to pick specific stocks within the large cap, mid cap, and the small cap buckets, which is great for investors like you and me, because through the multi cap route, we now get access to the best companies within the large, mid, and small cap space. It is for this reason that many multi-cap funds have a few fund managers working on it rather than one or two, because identifying stocks for every bucket requires some specialized skill. And a good example of that is the Motilal Oswal Multicap Fund, which is currently going through an NFO, and are also the sponsors of this video, who have a team of 6 fund managers to manage their multi-cap fund. I'll be sharing more information on this NFO at different points during this video. But just to close loop our discussion, unlike a flexi cap, where the investor has no idea in which bucket his capital will be allocated, a multi-cap investor has a fairly good idea on one's asset allocation, and in my opinion, can become the fulcrum around which your wealth creation strategy can be built. In fact, I do this, and in my case, my entire portfolio is like a multi-cap fund in terms of allocation. But if you don't want to go that far, then definitely consider using a multi-cap fund or at least a multi-cap fund layout. Right, so let's examine multi-caps from a performance perspective. And the first thing to consider here is the benchmark, which for most multi-cap schemes is either the Nifty 500 multi-cap 50-25-25 index TRI or the Nifty 500 TRI. Now, between these two, and according to me, the Nifty 500 multi-cap 50-25-25 index is the better benchmark, because it's a lot closer to how a multi-cap fund is actually designed, unlike the Nifty 500 index, which is highly sensitive to valuation changes. And as of last month, its constituents comprised of 59% in large caps, 26% in mid caps, and the remaining 15% came from small caps. I'll anyways try and measure both these indices from time to time, and it makes sense to do that. So let's start out with the trailing returns. And do notice the impact of having a higher proportion to mid caps and small caps, with the Nifty 500 multicap 50-25-25 index doing a lot better than the Nifty 500. I even computed these numbers on an SIP basis. And historically, there's a 1.5 to 2% alpha when investing via the Multicap Index as compared to the broad market one, which is absolutely in line with my own experience of having invested in multicaps for a few years now. To put this into perspective, the difference in annualized return for a 15-year SIP when comparing the two indices is 1.61%, which means a 10,000 rupee monthly SIP over this period. So that's 10,000 multiplied by 12 months multiplied by 15 years. So an 18 lakh investment in the Multicap 50 25 25 index would have yielded me a corpus of over 72 lakhs, while that same investment on the Nifty 500 would have led to a little over 63 lakhs, resulting in a 14.8% gain for the Multicap Index. My point is, in addition to the portfolio construction advantages I explained earlier, even the performance numbers are stacked in favor of the Multicap Index. And it's not just the index, it's the case even for actively managed multicap funds, which I'll get to in just a minute. So, anyways, the trailing return is just one part of the performance puzzle, which is why I looked at the rolling returns as well. And across the years, the average and the median rolling returns have always stayed within the 30% range, which is a good 1.5% higher than the Nifty 500 index. From a performance banding angle, one observes a little scattering in the 3-year and in the 5-year rolling return data. However, the 7, 10, 15-year period shows a very strong chance of achieving returns in the 12 to 16% range. So, if there are any conservative long term investors watching this video, then this information here can come very handy. Okay, so while I've been singing praises of the Nifty 500 Multicap 50 25 25 index and why it needs to be a part of your core portfolio, I regret to inform you that there are no index funds or ETFs for us to invest in. But thankfully, we have actively managed equity funds, a bunch of them actually. So let's understand the key variables on how you can select the ideal multi-cap fund for one's portfolio. I'll be looking at these points from the lens of how the newest kid on the block, the Motilal Oswal Multicap Fund, has been set up. And of course, the same factors can be applied across any of the 2 dozen multicap funds that are currently available for investment. Right. So, variable number one is something that you don't hear often, although it is extremely important, and that is the style of investing. So, different multi-cap funds, or rather fund managers, have their own methodology and style of identifying and picking stocks. Some of them use growth principles, some fund managers stick to value, then there's momentum, cyclicals, growth at reasonable prices, defensive stocks, mega themes, turnarounds, and so on and so forth. Now, if I want to get this right, it's very important for you to understand how the fund manager operates. And in the case of Motilal Oswal's multi-cap offering, the team is focused on identifying high growth themes that are likely to drive the markets for the years to come. To understand what the other schemes are up to in terms of their investing style, a good place to start is to read up on the fund's marketing material, especially the investor presentation, and do listen in to what the fund managers have to say during all their interviews. Of course, your own preference also matters here a lot. And personally, I'll prefer that my core fund, so something like a multi-cap fund, should be following the growth style of investing, or even better than the GARP style of investing rather than the value oriented one. The second variable to address when selecting a suitable multi-cap fund is the market cap composition. So the mandate is simple. A multi-cap fund needs to have at least 25% of its assets individually in large, mid, and small cap stocks. Also remember, the benchmark that most of the funds follow is the Nifty 500 Multicap 50 25 25 index, which means if a fund manager wants to play it safe and achieve returns somewhere around the benchmark, then he or she is very likely to keep about 50% large caps, 25% in mid caps, and the balance 25% in small caps at most times. However, and as an old saying goes, while a ship in a harbor is safe, that's not what ships are built for. And in that same spirit, one should look for multi-cap funds that aren't afraid to push the balance 25% towards mid caps and small caps as and when the opportunity rises. With regards to Motilal Oswal, the multi-cap fund is committed to allocating across market caps, which is good. But honestly, that is something that every fund house says, so please keep a track of whether that is happening or not. To put it in a phrase, we want multi-cap funds which aren't stuck to a particular ratio and are perfectly willing to swing between market caps wherever an opportunity presents itself. Okay, the third variable I'd like all of us to focus on is on focus. Of course, you focus on this video, but you also try to understand the fund's focus in terms of the portfolio and its constituents. For example, the other day I came across a multi-cap scheme that was invested in almost 90 companies with the highest weightage on any stock coming to just 2.7%. This essentially meant the top 10 stocks of this multi-cap fund had just 22% of the scheme's assets. And while I'm not saying this is wrong, as the fund house might have a process around it, and there are risk management principles to be adhered to, but again, my own preference is to participate in funds that are more concentrated, because then if a stock really blows up, it can have a very positive impact on the entire portfolio, which is a little difficult if the per stock weightage is going to be less than 3%. In this context, Motilal Oswal, as has been the AMC's practice for most of its funds, have capped their multi-cap offering to a maximum of 35 stocks, which is actually a very ideal number in terms of concentration and focus. And the fourth and final factor when evaluating multi-caps is to look at the fund's performance. Now, I have to tell you, or rather remind you, that the multi-cap category, at least the way we know it, with this 25, 25, 25% mandate, was put into motion only in the year 2021. So for multi-cap funds that are older than 3 years, well, the performance of the early years is not that relevant. And when comparing funds, it's better to look at the last 1, 2, or 3 years of data. So, really, there isn't a lot of performance data to bank upon, and this makes it all the more important for an investor to focus on some of the other aspects we touched upon. So, things like the style of investing, and my own preference lies in the growth style of investing. Always look for the swing activity. That is the fund moving from one market cap to another as and when the opportunity arises. Examine the focus level of the portfolio in terms of the number of stocks and concentration and what your own preferences are. We also discussed how a multi-cap fund or a multi-cap styled portfolio offers a lot of balance to your wealth building. Multi-caps come with inbuilt and excellent diversification with companies of various sizes and sectors. Is this the right time, or rather the right category to invest in? And I'll say multi-caps are definitely top draw, as these portfolios are aligned to the growth in the Indian economy, which looks a lot promising now as compared to where we were about a decade ago. In terms of risk, the use of mid caps and especially small caps makes the multi-cap fund a bit volatile, and that's where a careful examination of the riskometer will come handy. If you're keen to invest, then do keep an investment horizon of at least 5 years. And finally, do explore the Motilal Oswal Multicap Fund and see if it fits your requirement. The NFO ends on the 11th of June, and for your benefit, I've included the marketing materials and other relevant resources in the video's description. I sincerely hope you found this presentation useful, relevant, and informative, and that you'll take away some valuable lessons from it. Please do your homework. If you have any doubts, then do consult your financial advisor before investing. Do like this video, subscribe to my newsletter, and I'll see you very soon. Until then.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.